Well, good evening all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up. And this wrap-up is for Wednesday. And we're now at the 28th of April, 2021, just after 7 p.m. at night. So we had the FOMC meeting today, and I think the Fed chair was very clear in his words. I walked away from it. Employment. That is very much on his mind. He's concerned that a lot of the service jobs that were lost won't come back due to technology. He does not think that you have to worry about inflation. It's transitory so far. They wanted to get in. They wanted to, let's use the word embed. They wanted to lock in, and they wanted to not get back under that 2% area if they can get it up to that number. They haven't succeeded in that yet. So does that bode well for interest rates? Well, they're going to let the back end do what it wants by market forces, but they're still anchoring that front end, and they're still buying $120 billion a month. So that's what the Fed said. When asked about the housing bubble, no, didn't see it as a bubble. Strong, again, copper prices, lumber prices, transitory. Employment is what I see them focused on, but understand where the Fed has to concentrate. They either concentrate on inflation and or employment. That's their mandate. That's what they're doing. Tonight we'll hear the other side of this. Spend, tax the rich, tax the rich, tax the rich. That is not a policy statement or a political one on my part. It is a policy statement not on the Fed, but on President Biden. And that is what tonight's speech is going to be all about. It's his first time where he's going to address the full Congress. They're not going to be there. Not that they don't want to be, but they're only allowing 200 people in the chamber. So it's going to be strange. He's going to say things, and normally you get these long applauses or whatever. We're not going to see all that. Then they show people that don't want to applaud. I don't know how they're going to do this tonight. It's going to be strange, but everybody's going to watch it. Tomorrow, all that will be forgotten. We're headed right into the GDP number. That's where you start focusing. What is this doing? How strong are we getting? Remember the argument. People are saying they don't recall getting a 6.5% to 7% growth, and that's what the market's expecting, and then moving on towards maybe as much as a 10% number later this year, and keeping interest rates at 1.6 on a 10-year note. Doesn't mean it can't happen, but I'm just telling you. We also have never seen anything like a pandemic. So what is this market doing? This is paved. This is your infrastructure market. Tell me it hasn't stalled waiting to see what the president does and what the Fed did. It's now absorbed the Fed. So now the question is, how's it going to absorb the president? The trend, higher lows, higher highs, bullish. It gets broken. If you take out 25.95, you closed at 26.09. Won't take much to end that level up. Where's the support been? The 18-day average. So if it drops again, I'd have every reason to believe it's there. And where's the resistance? Right here at that upper Bollinger Band. What else? You are overbought. Are you embedded? I don't believe so. Both numbers today were over 80. They were both over 80 yesterday, but not the day before. Take my enhanced Bollinger Band course, because this is a classic setup that you want to see. I talk about it at the end of this video. So that's what I'm seeing there. Now GameStop, still looking okay. Resistance, 190.51. Support the 18-day average. Trend up. You're already in an overbought condition. Keep that in mind. XSD, these are the chip makers now. You're not trending. You have a lower low, a higher high. You got overbought. Now you're trying to correct that. I don't see this chart as being very exciting. And I want to say the same about SMH, the other one. You've got a higher high, lower low. You're just fighting at the 18-day average. There is no follow-through in this. PODX, it got high today. The market took out yesterday's low, big up day. Where did it stop? The 100-day average. You would expect that on that market. That should be an important first average. If it can clear it, and that's an if, I don't know, can it get up to the upper Bollinger Band? But until today's low is taken out, you gave cause for the bulls to step back in the market, in my opinion. And I think they stay that way unless today's low is taken out. And if that's taken out, it could mean you're going back to 1323. That could be the end of what we call a pop in it. That's not a popper, that's a pop. ESGU, you can see how the market has come to the upside in embedding. That's good. You can see that you still have higher lows, higher highs, resistance 96.66. I say the pros will buy this even if you take this number out because you're embedded the market. So until that's lost, I think the bulls are grabbing control. This was the first challenge of the upper Bollinger Band. Again, I teach this in that enhanced Bollinger Band course. Right, wrong, whatever, I think the pros took a chunk of money, if not out of the market today at that. What you have to hope then is that you get another day like this tomorrow to the upside. And if you get it and you close at the top of the day's range and higher than you did today, so it's got to take out today's high, close higher, that could be an upside breakout. So would the pros get out of everything? Not necessarily if they see that. If the market had just hit it and backed off, but do I think they took off a chunk? I do. And then if that happens, we can say, okay, this market has just done something. It is saying, and this is the XLE, the energy sector, it wants to pop higher. Not there yet. SPY. Do we have an embedded reading? Well, both numbers today are over 80s. They were over 80s the other day, over 80s there too. Oh yeah, we've got it. So even if you take out this 416.30, I think the pros are going to be fairly aggressive on buying breaks as long as the red line stays what? Over 80 when they buy, and I think they'll bail if you close under 79. In the emerging market ETF, overbought in an uptrend, more or less sideways action that has confined itself to the 18-day average of closes and the upper Bollinger Band as the resistance. Definitely it's got the upside bias and the trend up, but it's overbought. It's not all systems go. In GLD, the market has dropped back. It was interesting today because you came back so strong. The futures markets went up after the Fed speech, and they're up another $8 tonight. So I would assume this market, if futures hold on overnight, will try to get through 167.15, and this was basically your test of the 18-day average. You missed it by 50 cents. That's a lot to miss it by if you're going to go for it. So let's assume it doesn't hit it. I'd look for still strong resistance, 168.80 to 168.82, but I don't see any fresh buy signals on that chart. Momentum down. The objective when you lost the embedded reading here was back to the neutral number, the 18-day average. The market absolutely hit that number and held it. I don't see a trend at all. I see a higher high, a lower low, and you're in a support zone. TLT. Well, the market's got lower highs, lower lows. It did not throw out a fresh sell signal because it closed just over the 18-day average. Any lower close tomorrow would do that and possibly put into play this 136.48. So it's something I'll be watching very closely to see if it does throw that out. Last, in FXE. With the embedded reading, I'm looking for higher prices. Where's the market fought the battle? The 100-day average, and with what the Fed did today, he's not coming to the rescue of the dollar. The Fed also talked about digital currencies, and he mentioned that the United States, we are the reserve currency of the world. Everybody wants to be one. We know that the Chinese are trying to do that, and he made it very clear they can be the first with the digital currency. He sees too many problems, and being in the position of being the reserve currency, we can't afford to get it wrong. That makes sense to me. Are we going to have a digital currency? You betcha. You're going to have one. The world's leading in that direction, and the Fed won't be left behind, but you don't have to be the first. It's not about market share. It's the strength of the economy right now and what you've got. And I think that's what he's saying. Do I want us to be first? I would, but that's me. So you put this all together, you try to come up with plans, and I've got one for you. Learn how to work with this, if you will, my enhanced Bollinger Band course. Take a look at this.